And let's go straight to our biggest story this morning. Indian markets have cracked on global cues. Global stock markets have plunged. Dow Jones have suffered its worst day in over 6 years. Dow Jones Industrial Average dropped 4.6%. Investors have fled amid fears of rising interest rates. Jerome Powell, however, is sworn in as 16th chairman of US Fed. So it's overall, we can say that bloodbath on Indian markets. Many factors are responsible. It started from last Friday when the stock market, overall Indian market started coming down, triggered by LTCG long-term capital gains tax that was announced in budget. And we're joined by our guest this morning, Vivek Karwa, for more. Mr. Karwa, good morning to you. First of all, this kind of bloodbath was clearly not expected now. Now, what could be the next move as far as Indian markets are concerned?
Good morning, Sumit, and good morning to all the viewers. Yes, a bad opening today, and in fact, Sensex opened 1,200 points, and right now at around 850 points. So I don't think there is any, sensible selling over here, and this is just a panic reaction to what Dow did yesterday. So this is not connected to our markets in any way, or it is not connected to even long-term capital gains or to the earnings of Indian companies. It is purely global factors. And since Dow fell so much yesterday, Europe has followed it, Asia has followed it, and even India is following it. So what I feel is an investor who has money right now should start shopping. I think this is a discount sale, Diwali discount sale going on, and start shopping. So that is what I can advise right now. And you must remember, like a few weeks back, I was very cautious. I was saying, don't invest money at this level. Markets are definitely costly. But right now, it looks on the certain stocks look very, very cheap right now after this correction. So this is value buying which you can do right now.
What sectors would you recommend buying in, Mr. Karwa? What are your favorite picks?
See, overall, if you ask me sectoral-wise, there is no specific sector, because what happens is in this kind of rout which happens in the market, you find that stocks across sectors generally fall down. Now, for what reason did Tata Motors hit, say, 330, just for an example? So across sectors, you'll find value-buying stocks available right now. So don't be sector-specific. You should be actually sector-agnostic right now. And even any cap agnostic, and look at stocks which have fallen, say, from top 40-50%, and if the fundamentals, if you think, are still good. So there are many companies wherein the fundamentals are rock solid even now in spite of this fall, and they are down anywhere between 40 and 50%. So if you invest in such stocks, and even if there is a small recovery over a period of time, you'll find big, making money opportunity over here. So this is what is going to happen.
Yeah, just stay with us, Mr. Karwa. We take the viewers back to the factors that are responsible, or we can say that going forward, what would be the big factors that should be looked out for this week? First is RBI's Monetary Policy Committee meeting that has started. It will start today. Will be 2 days meeting. Tomorrow can be surprise as far as interest rates are concerned. There are Q3 numbers of many firms that are still to be announced. That will be one factor to be looked out for this week. Also, macro numbers are coming. That will be keenly awaited and looked out for this week. These are the factors responsible for moving the markets, apart from what has happened today. Back to Mr. Karwa. If we talk about the global markets, just for the benefit of our viewers, what has caused this decline or crashing of US markets, especially where Dow Jones has come down historically at its lowest level?
There are major two factors. One is US market was also rallying like India, and in fact, India was rallying due to US market, I should say like that. And there was flush of liquidity across global markets. So one reason is that the valuations were quite high. And the second thing, yesterday's fall was because the bond yield, in fact, had shot up a lot. And since whenever the bond yield becomes, high, it means that people would take money to safe haven. They are like safer investments wherein they're getting better yield. Why not pull money from stock market and invest in bonds? So that caused a big panic yesterday in U.S. markets particularly. And in fact, after the budget and just before the budget also, we have seen bond yields rising even in India. And that is when the volatility had started. Forget the budget, post-budget, the pre-budget era also, there were corrections in Indian markets because the bond yield had gone up. So similar trend has occurred in US yesterday, and hence Dow Jones has fallen. Now, how long will this continue is a different thing. So, but I think it should stabilize at some point of time.
And buying should also happen at these levels, Mr. Karwa, as you earlier said that. And, mutual funds, for the investors who are having mutual funds, what is advice for them? Should they buy more into their mutual funds?
If you have money right now, in fact, even yesterday's show I was telling that we were sitting on a lot of safe funds, wherein we had made clients invest in debt funds and other safer funds. That money we have slowly started shifting to equity funds right now. And even in equity funds, we have started focusing on mid and small cap funds because the biggest rout has happened over there. And this is the point wherein we should be entering them slowly. So if you have money right now, I think at least 30-40 rupees you should start investing. And in case there is another 1,000-point correction over next 5-6 days, you should invest the second lot over there. And after that, if you wait for 6 months, you would, in fact, after 6 months, those who are not invested would regret that, yes, there was opportunity and they did not grab it up. So I'm now bullish. Earlier I was cautious, but now I'm bullish seeing these valuations. And hence, and one more thing, Sumit, if you look at the results these companies have announced in India, corporate India, more than 60% of the results have come in line or above expectations. So which means that the results are not bad at all. Companies have started growing, and we have come out of the stagnancy which we saw due to GST and all, and things are falling in place right now. So when the earnings were not there, markets were going up very fast. And now when earnings have started coming, the valuations are correcting. So this would be a good opportunity. If the companies continue posting such earnings, I'll tell you 2 years down the line, you would make 50 money because of this alone. So use the advantage. As I said, this is just a New Year sale or Diwali sale, which people should think and start entering right now.
And also a big factor here is, Mr. Karwa, that today the Monetary Policy Committee is also starting its meeting in Bombay. RBI's policy is keenly awaited. People would like to see whether RBI goes for interest rate cut or not. What is your assessment over here? Do you think RBI will go for an interest rate cut this time, will bite the bullet this time?
I don't think interest cut would happen. In fact, there is a fear in the market that interest might be increased, in fact. So, and that is one of the reasons, again, why Indian markets are also cautious. And tomorrow is the monetary policy. And in case the interest rates are high, we would find that the recovery takes a bit longer. That is for sure. And if interest rates are by chance cut, as you said, I think market would take it very, very positively. And particularly, what I feel is RBI might just do a status quo. They might not do anything because on one side, markets are already in trouble. And the other side, the inflation also is likely to increase because of higher MSP announced by the government in the budget. So I think RBI might go a status quo. And in case of increase, it would be negative. And in case of cut, I think it will be positive.
And this overall, rout in Indian market was triggered by the LTCG tax that was announced in budget last week. Do you expect government to bite the bullet and go back on LTCG, or at least announce some relief on LTCG front so that there could be some relief given to the routing markets?
Sumit, I don't know how many viewers have been around in 2008 when market was falling. In 2008, when market was falling, I think Chidambaram was the FM. And that time, there was some pressure on even LIC to buy. LIC did support the market for a few days. But then, if markets have to correct, whatever benefit you give, markets would still correct. Now, markets are not about just benefits or earnings or all these factors. Market is having one big factor called sentiment. And if the sentiment is negative today, I don't think giving small benefits would actually perk up the market. Now, can government roll back LTCG? No, I don't think that would be a good idea. In fact, LTCG is not a bad thing. And as I said, markets are not falling due to LTCG. That was just one day effect. And it is all due to Dow. And had Dow gone up yesterday by 1,000 points, you would have also seen a big gap up opening, and LTCG would have been a thing of past. What government alone can do right now is just take away that STT also, because right now it's kind of double taxation wherein STT is also being charged and then LTCG is charged. So if government says STT is say removed, that would be a good motivation to the investors, one thing. And second thing, it would be also a safe saving for the government, because rolling back LTCG would actually harm their reputation than continuing it. So I don't think it is a good idea. At the most, HTT can be removed.